Stocks took a nosedive today after President Trump unveiled tariffs on 185 countries, raising the risk of a global trade war. It now has a lot of people wondering about their own personal finances. And joining me right now is Fiqri Dine, the executive director of JP Morgan Private Bank in Seattle, and Seattle University economics professor Brian Kelly. Thank you both for being with us this afternoon.
Of course.
So, Brian, I want to start with you. Today's dip in the market has a lot of people worried. Will it, continue to go down? Will it bounce back up? What are some signs that you are looking at?
The first thing I would urge is that people take a long-term view. There are dips and there are peaks in the market. You really have to, in my opinion, invest for the long term. And I'm not saying anything original in saying that. My own view is that the news that came out yesterday was almost a worst case. And so the market, of course, reacted accordingly. Now the administration's being cute, and if we start seeing some deals being cut that reduce the tariffs, perhaps that will be a positive signal to the markets. Unfortunately, markets hate more than anything else uncertainty. And I was hoping yesterday would resolve the uncertainty we're facing, but I don't think it has.
Oh, you say worst case scenario, and I'm sure a lot of people's ears are perking up. Fiqri, I want to ask you, I'm sure a lot of clients are calling in today. What are some of their biggest questions that they have right now?
One of the biggest questions is how long and how deep could the sell-off be? That's the primary concern. And at the end of the day, we've seen some weak sentiment coming into this period. But the fundamentals are quite strong. Companies are continuing to hire people, albeit at a slower pace. Families continue to spend. And as long as that happens, they could weather some of the pressure associated with some of the sentiment concerns. So the key thing is as Brian mentioned, if some of the negotiation could take place, the sooner the better, so that the sentiment doesn't start bleeding over into the fundamentals in terms of family spending and corporations hiring.
And on that note, Brian, we've heard the word recession so many times, fears of that happening here in our country and globally. Do you think we're heading in that direction?
Well, like we just heard, the economy actually is quite strong. On January 20th, the economy that President Trump inherited was doing very well and is continuing to do well. So what are the concerns? First is the direct effects of the tariffs, which is not good. It's a large tax increase. Second is the psychological effects of the tariffs. And third is concerns about inflation and how the Federal Reserve will react to try to control inflation. So those are the very short to medium term concerns. Are those enough to turn the economy towards recession? I don't have that crystal ball, but they aren't positive, that's for sure.
Everyone wishes they had that crystal ball. You talked about the psychology, and Fiqri, I want to ask you this. A lot of people wondering what to do with their 401ks. I want to hear your best advice and also how that changes the closer you are to retirement age.
The first and foremost is to make sure you have a plan. You have to make sure your portfolio, meaning your stock and bond mix, matches your risk tolerance. And if it does match, that means that you could weather these storms. A down 4 or 5% day feels uncomfortable, but in the scheme of things, on average, on a given year, we're down 10% almost every year. So particularly in a 401k, make sure that your risk is correct, and then you could weather the storm.
Okay.
Ultimately, I think your other question was, what happens in 401ks as people age? Mm-hmm. And what's important is that your bonds, your risk comes down the closer you get to retirement. And the other dimension is how much of your wealth is the 401k, because that also alters how you manage a portfolio.
Absolutely. Thank you. And this question is for both of you, but Brian, I'll have you start. What's your main message for our viewers, people who want to protect their finances?
I think not to panic, to probably to continue the same course they've been continuing on. I think that the idea that a 10 or 20% dip is cause for panic. No, I don't agree with that. If this continues for many years, then I will be worried for our country. I think we'll become basically isolated and lose our innovative edge. But I'm optimistic. I think one way or another, this sort of nonsense won't continue for more than, say, 2 years. So, in terms of I'll tell you what I'm doing with my personal finance. I'm a buy and hold sort of guy, and I'm continuing to buy and hold because I have a fairly long time horizon.
Okay, Fiqri, what's your message?
My message is, along with Brian, is time really heals. So if you take a 20-year period look at the market's been up 366%. And during that 20-year period, we had the global financial crisis and we had COVID, which were two very, very challenging periods. But if you stayed invested, you were up 366%. So I'm hoping that then would allow people to put into context a bad day, a bad week, or a bad few months to ensure that your investments are accumulating through time.
I want to thank you both for being with me. Thank you for those answers. I'm actually feeling a little bit more optimistic than I did at the start of this interview. So thank you both for being with us. We really appreciate your insight.